As of October 30, 2024, the Japanese Nikkei index is buoyant, with gains driven by anticipated fiscal stimulus measures and sector rotation favouring technology and consumer services. However, it faces pressure from US rate hikes, which could strengthen the dollar and impact Japanese exports. Gold near 2750 remains supported by investor caution amid global market instability and upcoming US elections. Rising yields present a challenge, but demand holds strong as inflation concerns persist. Silver, meanwhile, tracks similar trends with steady demand, but faces volatility from fluctuating industrial demand and market uncertainty surrounding major economic events. G'day folks, welcome back to another update, and today we're looking at the Japanese Nikkei, gold and silver. And first we'll look at the trends, and before going any further, make sure you hit that like and subscribe button to support the channel. Here we've got the monthly, the weekly and the daily trends for the Nikkei. And you can see here on the monthly, it's still neutral. It's within that moving average range of the CCI, so somewhat neutral, so just be cautious. We might see a bit of a pullback. On the weekly, it is also neutral after being bullish for a couple of weeks there. But notice as well, we do have this bearish divergence between higher highs there and the lower highs on the CCI. So it actually had pulled back and hit that retrace level between the 23-38% level, and it's bounced from there. So now the CCI is still dropping, trending lower. Just be careful, even though it looks like it may pop its head above that moving average in the coming days, possibly. On the daily chart, again, we've got it's broken a fresh breakout to the upside above the moving averages, giving us a bullish signal. Likewise, the price has broken up above its respective moving averages. Now notice it's approaching this minor resistance at 40,280, and then the next level of resistance will be this major one up here at 42,500. So again, one step at a time. We only go long on the intraday based on the daily. So if we go to the intraday charts, you can see here based on the daily going long only, you would have taken these little long trades there. So if I put up the bullish arrows, you would have taken long positions at each of those, and currently potentially you'd still be in a trade. Now you could close a couple of ways, close a trade a couple of ways. When the CCI breaks into that moving average band, that's one way, or use when the price breaks in the moving average of the price moving averages. So there's a couple of ways of doing it. Sometimes the CCI gives you an early warning to get out. You can see there, for example, you would have got out there a lot earlier than waiting for this to pull back, and then re-enter it again when it breaks above the moving average band. So there's a lot more entries and exits using the CCI entry and exit level, but in this case, if you're trading based on the price chart, you'd still be in a trade. Now there's no divergence to worry about. The CCI is trending in line with the price, so that's a good sign. And there's no divergence on the daily as well. Let's look back here. Yeah, there's no divergence to worry about as well. So we may see a few more higher prices in the coming days, reaching this, at the least, this minimum minor resistance at least. Next we look at silver. Again, the trends first. So on the monthly, nice big bullish move on the CCI, but also above the moving averages of the price chart. So bullish movement there. No sign of a divergence. On the weekly, however, just be careful. We've got a bearish divergence, lower highs on the CCI versus higher highs on the price. And if that was to pull back, let me draw Fibonacci back to that recent low. We'd expect a pullback at the very minimum between that, let's pull it back to there, between that 23 and 38% retrace level. So we expect it to pull back to that level if it starts pulling back from there. So don't short it, but again, if you're trading long based on the weekly, you'd want to be careful and potentially start seeing a pull to the downside. So that's a bearish divergence on the weekly. On the daily, we did have a bearish divergence back here, lower highs on the CCI versus higher highs on the price. And you can see there it broke down and hit our 38% level. That's actually not the 38. The 38 is there. So it actually hit that range there, and then it bounced up there nice and strong, giving us another bullish move. At the moment, those lows are still, that low is still lower than that. Sorry, that high is lower than that high, and that moves in line with the price. So if we see the price break higher and the CCI starts trending down, then we have consider that a bearish divergence as well. But at the moment, no divergence to talk of. Now, if we go to the intraday charts, you can see there a little fresh breakout on the daily. We only take long trades. And again, long trades, you would have entered a position there, and that was moving up, and now you would have closed it out when it broke into that moving average band. Or alternatively, close it out near the top there when it breaks into the moving average of the CCI. Lastly, we'll look at gold trends first. On the monthly, big bullish move, and it's still nice and strong uptrend on the price chart as well. No sign of a divergence. On the weekly, we do have a bearish divergence happening, and it's still in play. And that's actually risen since our last update, so I'll move that to that level there. And likewise, that retrace target will be at that level there if it starts pulling back. So again, we wait for it to break further to the downside, and that'll be the minimum retrace if it does pull back. Of course, it could fall a lot further, so just be careful of that. Now, if we go, that's the weekly. So if we go to the daily chart, again, that's also a bearish divergence, and we draw that to that level. So between those levels there, lower highs on the CCI versus high highs on the price, and that's still rising. So I'd like to see it pull back a bit and invalidate this divergence to be more bullish. It's already broken through this key resistance at 26.85, and there's no sign yet of another resistance that I can see. So we'll keep an eye on that, but at the moment, bullish movement on the upside. So if we go to the intraday charts, again, taking only long trades, but again, be careful of this bearish divergence. You would have taken long trades based on the CCI breaking above the moving averages. And again, a couple of ways to close it: when the CCI breaks into that moving average range, and that would have been at that point there, and then re-enter once it breaks above that moving average there, so re-enter it again there. Or hold on to it until the price breaks into that moving average range on the price chart. At the moment, notice the CCI is negative or bearish, so just be careful about going long too strongly until we see this CCI break to the upside again. To support us more, make sure you hit that like and subscribe button and share the videos. But for some more insights into some blue chip share scans, I do a weekly report, and in that report we also look at insider information for shares that are trending in a bullish manner. So go to the Patreon page, and links in the description below.